Attention, all butterscotch biscuits. You are my friend. Look at the Bitcoin price. We're going to go through so much juicy information today. If you see this little wiki up and the wiki down, this is Bitcoin on a 1 hour. No. Up, down, left, right. It's not moving anywhere. We just had the FOMC, otherwise known as the FOMC, and we've done nothing. The US yield curve has removed rate cuts, and instead it's priced in a longer hold. Now, don't be too scared because they're always wrong. We're going to go through and I'm going to show you now. And as a friendly reminder, we can see this is the weekly chart for Bitcoin. We are still rotating up and around as we progress closer to October. And you can see on the weekly super trend as well, everything is in the clear. We're back towards my golden ropes. I wonder if we're going to thrust upwards and go into the golden box of friendship. This might be a danger zone. Why? Because, as I've shown you many times, if you draw a fib in each crypto Bitcoin cycle, from the top to the bottom, it always goes around the 50% retracement, which would be a $42,000 Bitcoin. If we're lucky, it'll go all the way up to 48K. And if it's going to be a bit of a poopy, then it's only going to stop at 35K. So we're going to wait and see what happens. Let's hope that actually does happen instead of the road down to Goblin Town. And now onto the juiciest part of the news. It's actually some fascinating things here. So firstly, the Federal Reserve, obviously they held rates at 5.5%. The US yield curve is now pricing in a long hold. So they do believe, for some reason, even though they get it wrong every time, friends, and yes, I do mean wrong every single freaking time. 100% of the time, the Federal Reserve gets it wrong. They're bug eater overlords. Of course, they're going to get it wrong, but it's psychological operations. So they're now pricing in literally a very long hold. It's 12 months, all the way up until September 2024. They've removed the cut now. They say, well, no more cuts, darling. And Blueberry Pies, I've gone to the Fed Watch tool here, and I've actually clicked around just to observe the actual curve. And because it's been shifting, right, after the announcement from the Federal Reserve, they do have one cut. That's it. Nothing else. They've removed all the stimulus. So as you can see, we're at 5.5% here. You look at the first number, 550 basis points. This is 5.25. So this is the funny part. They've got 70% chance of one cut, but that's it. It doesn't continue later on at all. So even if you go to May next year, it's still around that same price, and March as well for next year. Yeah, so it doesn't have any of the cuts at all. And look where it's distributed against exactly a year from now. It's kind of just like one cut. So it doesn't actually have anything. So the curve is basically flattened. So what it looks like is, right, we're all the way up here. And they're basically like, nah, maybe one cut. This is just like one little cut, one tiny cut. That's what it looks like. I'm going to tell you right now, there is 0% chance of that happening. You got China flipping around. You're going to have the US elections. You're going to have pre-programmed FUD. There is no way in hell they're going to be able to pull this off. They've never pulled it off in history. I'm going to show you. And now I've constructed for you this beautiful, sexy chart where you can actually observe what's going on, friends. This is the orange line is the S&P 500, and these lines are the federal funds. Now, actually, remember I said to you they've never been able to pull it off? They have once, all right? And it was right here. This is exactly 365 days of a rate hold. But look what it was before, the great financial crisis. So if you go here, friends, you know in the great financial crisis when it was going down, I remember when I was a wee little pup, I had no idea about macro, didn't know what's going on, okay? And in the little things I'd read in the media was, I remember, do you know what they were blaming it on here in the crashes? People were saying the Federal Reserve held rates for too long. They kept them too high for too long. So that's what I think. And by the way, the housing market was collapsing here. It's starting to collapse. It just ended up snowballing into everything else. So when you're going out here and you're looking at, okay, what are the chances they're able to do this for a nice 12 months? I hope it is. I really, really do hope, because this rate hold is actually the price pump in the market, friends. That's what you got to understand. The rate hold is the final gasp out. But I don't want to believe, and you don't either, that they're going to be able to pull this off for another 12 months. Because why? Because that means have absolutely no fear if you're carrying any crypto bags for the next 12 months if we start going up. So if Bitcoin goes to 42 to 48K, like I said, man, you got to be careful. Like, you got to be careful. At some point, the S&P 500 can roll over and do the dinghy. You know, you have these, look at this part here. Okay, so you had a rate hold for 12 months. But before that, look what happened in 1990. This is the tech bubble, okay? They held, they cut, and they hiked again, and everything was collapsing. So it's very hard to predict these, and they don't even know what they're doing, and there is a greater plan to let inflation run hot. So we're just going to assume that the crypto cycle is going to play out. You see all this complicated stuff? We don't actually have to guess anything at all, because I would rather just do what works. What works is, I know this is going to sound crazy. 1, ignore macro. Yes, I know this is very controversial. I know once you have leveled up, you'll be able to see what I see. All right. You ignore macro. There are so many variables that you think are really, really bad. They are counteracted by things really good. Like, you think you're the only genius who can see a crash coming. You know the governments, friends. All right. The governments, they cannot stand the thought of us revolting. You understand this? So what they do is they have pre-planned methods to stabilize the economy if they see crashes in the next 3 to 6 months. You're constantly battling with the government who's constantly printing, stimulating, and doing stuff to build infrastructure. So I'm going to assume all of that balances out. And guess what? You know, I don't even have to assume that, because it sounds crazy, right? What you think you had to worry about macro in the earlier crypto cycles? No, you just had to worry about this 4-year cycle. Okay. But remember, S&P 500 wasn't rolling over at the time. So this is all we can go off. And we know for a fact the Bitcoin halving is coming in April 2024. And see, a lot of people say to me, well, what about it being priced in? Don't forget, there are 420 million people in crypto. We are still small. We are going to 1 billion. The stock market is exposed to the whole world. Everybody in the world's in the stock market. So you're only getting like a couple of % of people every year leaving and a couple of % of people joining in. So there is no giant edge here. There is no retailers to come in and get emotions in the stock market anywhere near to the extent of what crypto does. That's why ours is so much more exacerbated. Now, I'm hoping we continue this, but I guess we'll just wait and see. And if you couldn't be any more bearish, I mean, this is what's going to tell you right now. Look at this. The Federal Reserve says they don't see a recession until at least 2027. I promise you, every single time I read this, I'm like, okay, literally start the clock. It's over. I can't tell you how many times, go and watch any of the macro people. They literally get these quotes. They grab these quotes and then they just display them out and they say, well, the Federal Reserve said we're never going to have a recession for 2 years. And they juxtapose it with pictures of, like, you know, millions of people have just lost their job. Like a couple of months later, every single time. So that's why I mentioned to you, this is ultra bearish. They are wrong 100 out of 100 times. Also, just to remind you, the Federal Reserve is not in the business of forecasting right. They're in the business of managing expectations. They must keep retailers and consumers and workers in the economy, they must keep them optimistic at all times. They did a study that showed that Federal Reserve is 100% of the time wrong. Not even kidding. Not 50-50. They're worse than a flip of a coin. They're 100% of the time wrong. Why? Because they have to say things are always going good. They never want to be the reason that people end up shifting their expectations. And, you know, to be honest, I don't like the bug eaters, but if I was in that position, I'd do the same thing too. Because you know what happens? People people just point the finger. They go, oh, it was this guy, it was that guy. So they just stand back and they let everything happen until they have to sweep it in with the glorious money printing. Also, we are moving closer, right? Look at this. House Financial Services Committee passes a bill to ban the Federal Reserve from creating a CBDC. This is junk. There is no way this is going through. The bug eaters, friends, our whole existence right now, our whole generation right now, it's to usher in CBDCs. There's so much power here. There's absolutely no way. That's like saying in crypto, all right, everybody, let's agree never to use leverage. You're like laughing. You're like, what? We made this industry for leverage, baby. You serious? There's no leverage. Get out of here, right? That's how critical this whole thing is. So this is just, this type of stuff is put in where people actually think we're going to win the battle, and this one, we aren't, all right? This is the most fascinating, actually, okay? Apple have explored launching a built-in stock trading app on iPhones, okay? Now, this was wild. Look at this. This blew my mind, friends. Guess what inspired them? Meme coins. They started looking into it during the meme coin season of 2020 and 2021. So they take it on board. They were going to release it in 2022 last year, but then the stock market fell. Friends, I told you, they're all timing it, every single person. That's why when I'm looking at Roca Negra, I'm telling you, they're all timing it, man. They all know. They know. They're like, okay, sweet. Let's make sure the ETF is ready so people get a full 12-month pump so we can dump on them. They time it all. Everyone knows. What, you think you're the only genius you can see this 4-year cycle? They can see it too. But they're not only geniuses, they're reptiles with blue lizard tongues. But let's end on a wonderful positive note, okay? Are you still doubting the power of meme coins, okay? And it's not just meme coins, it's memes. It's memes. We are bombarded. We swallow information every single day. I know you love swallowing. Family-friendly show, remember? Keep it G-rated. We just love swallowing all that information, but our dopamine receptors are fried, okay? Yesterday, it's about BitBoy. Tomorrow, it's about the Fed. I told you this was going to happen. No one cares. It's a TikTok generation. Our brains, our neurotransmitters are fried. So how do me and you communicate? Through the power of memes. Do you understand me? A picture says 1,000 words. That's why we gravitate towards the emojis. All right. By the way, this is a fascinating picture, isn't it? Little Sailor Moon look like. Okay, look at this. So just remember, 9 hours ago, Apple admit it got inspired to stall stock trading apps on their phone. But where did they get it from? Memes. It was freaking memes. I wish I could elaborate on this, friends, but you get the point, right? It wasn't Bitcoin, fix the money, fix the world. It wasn't Ethereum, decentralized smart contract platform. It wasn't Chainlink, let's link all chains. It wasn't Hex, native trustless yield. It wasn't Pulse Chain, real DeFi. It wasn't any of that. It was memes. It was Doge, SHIB. It was the meme buyers, the degens who went into AMC and the meme stocks and Tesla. That's what grabbed their attention. I'm telling you right now, friends, that please remember what I say. Just because a market goes up, just because there are billion-dollar funds with people who shave and have an HR department, just because they're in an asset you own or they're in your position, doesn't mean they're not a weak hand. Everybody gets FOMO. You see, when me and you get FOMO, we just go click a buy button. But when they get FOMO, they send 13 kids out to go make a report. They say, hey, make me a 90-page report on the future of crypto, a future of this asset. And they do, and they get it, and they go, okay, let's put it through the board now. And then 3 months later, the board understands it, and they go, okay, let's allocate $80 million into it. It doesn't matter. They're buying our badges 30 days, 90 days later with millions of dollars. It doesn't mean they're any more correct. No, it doesn't. It means they also are privy to fear and greed. Let's all unite and respect the Pepe. Friends, I just want to share with you something. Don't be scared, but have a look at the workload I have. Yeah. Love you all, friends. You see, I've got 1,000 unread messages. I'm sorry, friends. I can't do it. I can't do it. I can do it. We will do it. We're going to win. Tell mom and dad we love and appreciate them. I'm going to catch you in the next one.